So we're going to talk about cost accounting, financial statements, and ratios. What's the situation in the economy right now? There's still uncertainty, even though the recession happened in 2007. People aren't still spending a lot yet. Energy, if it's not rising, it's still high. People are still worried about it. Costs tend to be going up, but prices are hard to raise. Consumers are still a little bit fearful. The global market is, complex and difficult. Like I said, the roses are coming from Ecuador, carnations are coming from Colombia. Fruits and vegetables are coming from all over the world. You can't import soil into the country, but if you can shake the soil off the roots, you can even bring trees and things in. Consumers are concerned about chemicals and pollution. Still, housing starts are fairly slow, and a lot of flower production is related to that. And we've got a mature market in a lot of areas. So a lot of floriculture businesses have gone out in the last few years. So it's more and more important to be financially savvy. In the past, when you were in that growth market, you can pretty much grow anything and people are going to buy it. But in the mature market, not so true. And a lot of what you're doing may be more in that mature market. So again, try to find something that you can differentiate and push yourself over into that growth stage. And we talked about the reason that costs vary from grower to grower because of the size of your greenhouse, where you're located, how you manage your business, time of year, volume of production, how labor is usually your biggest cost, so the availability of labor, what you're growing, the product mix, the market channel. I remember when I started out back in 1978 working on my master's, I was looking at Easter lilies in flower shops versus mass market, which was Kmart back then. And I quickly learned that an Easter lily isn't an Easter lily. So the one that you grew for the florist was in a clay pot back then. Remember clay pots? You don't see those in greenhouses anymore. It was a bigger bulb. It had a wider spacing. It had packaging. It was a totally different product. It cost different amount of money to produce versus one that was for Kmart at the time. The kind of heating system you have. Right now, oil is very expensive compared to natural gas. So all those factors go into play. So why do you need financial management? Well, you need it for budgeting because you're in business, so you have to make money. You want to manage your cash flow. You end up having to buy supplies before you sell the product, so you have to know when you need to borrow money. You need to control your credit, pay off your debt. You need to know what it cost you so you can see if you're priced right in terms of profitability. You need financial statements to go to the bank and obtain capital. You need to know whether you're making money or not. You need to know from year to year, have I improved? Am I on the right track? And so you need it for planning. So again, your costs are different from everybody else's. You need to do your own cost accounting. So why don't people? Every year people finish their whole business plan except for this part. So why is that? Well, I think that we tend to love plants, and working with numbers is not most people's passion in this room. Is anybody here because they love numbers? Are you here because you love plants? Okay. So, I think part of it is fear of the unknown. If you're growing a lot of different crops, do I want to know that my favorite crop is the one that's making the least money? Probably not. But I still think you have to make money to stay in business overall, but you can grow an occasional crop that isn't the most profitable if it fits in other things. I mean, making the absolute most money is probably not the major goal of all of us, but if we don't make some money, we're not going to be in business to do what we love, right? But money isn't probably the main driving force, or you'd be in another business. So, again, sort of the balance there. It takes a lot of time, and there are programs that spend a lot of time and you can get exactly to the tenth of a penny. So I see it as a trade-off between how much time does it take to come up with some of my cost versus, how much information am I getting out of that extra effort. And you may be content with the status quo, and that was true in the past. But unfortunately, I'm becoming more popular now as the economy gets worse, because people have to do this, and that's kind of sad. I wish they would have done it back when they were making lots of money, and they could have, it could have been more fun instead of now sort of doing it for survival. So as a producer, generally you own the land, you own the greenhouse, you own the business, so you're going to have returns for several reasons. One is that investment you have in that facility, so your return there would be sort of you're investing your money in that operation instead of the bank, so it's kind of like interest. You're earning money for your labor, so that would be a wage. You're earning money for management, so that would give you a salary. And you're taking the risk of being a business owner, so that's where the profit comes in. So you're probably wearing several hats as a small business owner and different ways of making money, and we kind of try to keep track of all of those. So in terms of cost accounting, I started this years ago when I was asked to do a talk on cost accounting, and I thought, gee, what can I do to make it simple? What does everybody have? Well, everybody has an income statement or a Schedule F, and everybody knows how much it costs for the pot, the seeds, the cuttings, because you're all plants people, so you keep that all in your head, right? So let's just start out with that information and see what we can do with it. So if you put down everything on your income statement or your Schedule F or your Schedule C, that's your total cost. Then I want to allocate as many costs as possible to each plant, and some of that you can do because you know what those cuttings cost. And then I subtract that from your total cost, and then everything that you can't allocate to a crop, we can treat as overhead cost and allocate on a per square foot per week basis. Is everybody following me? So I thought that was a fairly simple way that is kind of quick and dirty, but it works. So you want it, and you have to have a desire to do it. So as I mentioned, we have this program that's free. So what I had done is develop this Excel spreadsheet, and I thought, well, I'll just put it on the web, not realizing how complicated that is, and it required a lot of programming. So we only were able to put 5 crops, but this will give you an idea of how it works, and we sell the Excel spreadsheet for $150 that does a lot more crops, and it has a lot more bells and whistles, because I did this just as a teaching tool years ago, and everybody says, make it available for us, so I keep adding things to it. So we'll go over some of the things that it has. So again, everybody has to do income tax. So you've got your income tax statement, either Schedule F or a Schedule C. I mean, as a farmer, you're supposed to use Schedule F, but some people use Schedule C or an income statement. So the Excel version is here. So we start out with all the information on your income statement. And I started out doing this for greenhouses, but then as we get more and more diverse, a lot of greenhouses in New Jersey have outdoor crops, so we added a column for outdoor crops, so it totals them up. So you can kind of do your whole farm there. And then if you want to calculate ratios, you can't just use the income statement. You've got to have information from your balance sheet, which usually, I've never been to a greenhouse that had an accountant that you didn't get a balance sheet. So once we have an income statement and a balance sheet, we can do all the different ratios that we want, I think, there. But I calculated the 17 most useful ratios. I pulled all the different fact sheets from all the different universities around the country in agriculture and what they thought the ratios were important and what they recommended. A lot of them have these recommendations of where they should be. So I have a column for there. I have, if you put in all that information, it calculates what your ratios are, and then it makes a recommendation, and then because it really is an educational tool, I have the formula there and then an explanation of what that means. So I won't go over all that now, but that is in your handout. So like I said, we start with the income statement, also referred to by other names, profit and loss statement, P&L statement, operating statement, or statement of earnings. So it summarizes your income and expenses over a certain period of time. And you can do this actually every day, every month, but generally we do it for a year. So it's over a time period summarizing all the inflows and outflows of money. And to simplify it, it includes the operating expenses, so those are your direct costs, your overhead expenses, your depreciation, and then any gains or losses on capital items that you would sell. So the simplest one is you take your sales, you subtract your direct cost and your overhead cost, and that's why we call it the bottom line. At the bottom is your net profit or loss on your income statement. That's the last line. So why do we need an income statement? Well, we want to look at profitability. And ways of measuring profitability are return on assets and return on equity. So there's some ratios in there for that. Financial efficiency, the ratio of operating expenses to value of production, and the ratio of debt service to value of production. So just to give you some examples, this was from an actual survey. I think it's getting to be several years old now, but I surveyed several greenhouses in New Jersey, and the average sales were a little over $2 million. And what I want you to look at more is the percentage of sales rather than the numbers. So the seedlings were about 22%, and then we had pots, 6%, marketing containers, growing media, fertilizer and chemicals, the sales commissions, and the direct cost end up being about 34%. So those are the materials. Then I divided labor into overhead and general. So overhead salaries, see, people don't pay themselves much because they usually are sole proprietorship, so we probably need to change this, but anyway, most of it ends up being general labor, so it's about 32%. So like I said, we tend to try to put so much plant material into these greenhouses that those supplies are sort of running neck and neck with labor for a lot of people. But labor's still way up there. And then utilities, like I said, a lot of these should sort of be variable, but in fact, you kind of pay them year-round. So, and see, heating fuel is 3.5%, but that went up quite a bit in, I think, 2007. So other categories of overhead depreciation, we're running short of time, so I won't go into my little spiel about that, but these are all the overhead costs, about almost 18% for the typical greenhouse in New Jersey. So the average greenhouse was almost 140,000 square feet, sales of about $2.2 million, net returns of $211,000, so about 9.5% profit. So what does that mean when we talk about profit? Well, it's profit per dollar of sales after paying your salary and accounting for the opportunity cost of capital. So we want to subtract out the interest and the depreciation. And if that number is not as high as you would like, what should you look at? Well, maybe you're not pricing right. Maybe most of us haven't raised the price of our product in quite a while, or prices have not been increased, but your costs have gone up. The cost might be too high relative to the size of the farm. Maybe you didn't need that fancy tractor that you bought. Maybe you could buy a used one. Not enough sales for the resources that you have. You have high overhead costs, spending too much on inputs, or something happened and you had a crop failure. If the costs are too high, then what costs are the highest? Labor and supply seem to be the biggies for most greenhouses. Are these costs controllable? Are there there's some other way I can do it? Are they necessary? Can I do what I'm doing in a different or better way that would be more cost effective? Could I mechanize and reduce costs? Or are we over mechanized and that machine is not really being efficiently used, and maybe I should sell it and reduce my overhead? Is labor being used efficiently? Is there too much labor, not the right kind of labor? They're not trained properly. What about in the slack periods? Am I keeping people employed year-round that I don't really need? Is there some way I could change it so I do keep them employed? Do I have not enough labor in the really peak periods so that I'm not doing everything that I need to do? In terms of cost, every dollar that we reduce in terms of cost is another dollar that you add to profit. And I think most people concentrate on, let me just increase sales, but when my profit's only 9.5%, what happens if I increase sales by $1? I'm only making not even another dime in profit, but what happens if I reduce my cost by $1? I get to put that dollar in my pocket. So cost control, in some ways is more effective than trying to increase your sales. I mean, you have to have some sales. I'm not saying that you don't, but when you have a fairly low profit industry, cost control becomes very important. So I know some of you were asking about balance sheet before and didn't quite understand it, but it's I'll try to make it as simple as I can. So a balance sheet is assets, which is everything of value in the business, and it's divided into two categories: liabilities, which is claims by other people other than yourself, and net worth, which is the claims that you have, things that you've already paid for that you own. So that's why it balances. You've got all the assets on one side, and then you divide it into who really has the claim on it, the bank or creditors or you, okay? So that's where the balance sheet name comes from. And then we used to divide it into current, intermediate, and long-term, but now we just have current and non-current. And that's very simple. Current things are things that will turn into cash in 1 year or could turn into cash in 1 year. So cash obviously is already there. In a greenhouse, our inventory is going to turn into cash, we hope, within the year. Accounts receivable and prepaid expenses. So everything we are going to be able, in a natural course of the business, turn into cash within a year. Things that are going to take longer than a year to turn into cash are non-current assets, like your vehicles, your equipment, securities, buildings, and land. So again, I made a balance sheet to kind of match that example, and we talked about what the current assets were and the long-term assets. And liabilities are the same way, current and long-term. So current liabilities are things we're going to have to pay within 1 year. Long-term liabilities are things that we owe, but we don't have to pay it in the next 12 months. We can pay it later than that. So the current liabilities are notes payable, accounts payable, rent, taxes, and interest. And the non-current liabilities are your mortgages on your lands and your buildings. So we look at our liabilities, we've got the same thing, accounts payable, operating debt, and then long-term liabilities. So we said that in this example, your net worth, or how much you own, is about $758,000. And then from those figures, we can get ratios. And some of the profitability ratios, if we mentioned the net income, $211,000, so the profit was 9.5, return on equity 27.9, and return on assets is 17.11. But remember, I think around 2007, fuel prices just suddenly tripled. And even though I said fuel is not a huge amount, when it triples and you're 3.5%, you multiply that times 3 and your profit's only 9% or 9.5%, what happens? You went from a profitable business to a sea of red all of a sudden. So if we just take this cost accounting little spreadsheet and change those numbers and triple the fuel, all of a sudden we went from making $211,000 to losing $37,000. We went from a profit margin of 9.5 to losing 1.7, return on equity -5, and return on assets -3.1. So what did we do? Well, one of our growers decided, I'm going to grow my own. I'm going to grow switchgrass. And that means I can control the assets. That's the manager, right, that wants to be controlling. But he's also very visionary because he's looking long term. I don't want to have to depend on what's happening in the rest of the world to determine whether I'm going to be in business or not. Okay, so profitability ratios we calculated in the spreadsheet. Like I said, it comes up with your figure, what's recommended, and gives you the formula. And those are the numbers you can look at. There's also efficiency ratios of how well do you use your assets. So this is kind of the profitability ratios are all off the income statement. The efficiency ratios are a combination of income statement, balance sheet. So how well are you using your assets? And the thing you want to do, because there's not a lot of information out there for the average greenhouse because they're mostly privately owned, so there's not public information. But what you can do is track your information year after year and see how you're comparing against yourself. That's what you want to do in the business. In terms of liquidity, there's ratios for that, and this is how well do you meet the current obligations without disrupting your normal operation. So the current ratio is current assets divided by current liabilities. We're saying we recommend 1.5. It's greater than 1.5, and in the greenhouses we looked at, it's 1.8, so we're doing okay there. Solvency ratios, how well do I pay my loans? So again, we gave you some ratios there. Your debt to asset ratio, you want that to be less than 30. We're a little bit over that. So in tough times, if you don't have a lot of debt, you can survive better. But again, there's this thing about, I think it was in the 80s where it was all these ads on the middle of the night, how to use other people's money. As long as the times are booming, that works. But what happens when they don't? It's going to be hard to pay back that debt. So, you know, high risk, high return, but high risk also, you could go bust really quickly. So what happens, remember, when we triple those fuel prices, what happens if I could just raise the price of my product by 5%? Well, I don't totally recover to where I was, but guess what? I'm not red anymore. So 5% probably wouldn't be too much for most of your consumers to pay. And what does everybody else do? The airlines and everybody else has this fuel charge. So you could put on a fuel charge. And when we surveyed greenhouses, they said, no, nobody will pay that. But I don't know if that's really true or not. And it certainly beats, you can't take that sea of red for very long and stay in business. Luckily, the prices fell a little bit for fuel, but you've got to do something to deal with the current situation. What if I could just reduce my cost by 5%? Well, it's fairly similar results to increasing your price by 5%. You're still in the black. You're making $75,000 instead of $210,000, and all your ratios are positive. So that's another option, is try to reduce your cost. If you don't think you can raise the price, maybe I can reduce my cost. That might not be so easy either, because you're buying these things from somebody else. So I made a typical greenhouse that has petunia flats, marigold flats, geraniums in 4-inch pots, and poinsettias, and tried to fill that greenhouse up most of the year. This is what we think we can do. How much space we're using, everybody knows how much space they have on the bench, how many weeks it's in production. Now, I think what people forget sometimes is it may cost me 8 weeks to produce it, but if I don't sell it and it's sitting there for 2 more weeks, guess what? That greenhouse has to pay for 10 weeks instead of 8, so just keep that in mind. And then anytime I go into a greenhouse and I say, well, how much waste do you have? And they say, oh, we sell everything. But then in the back, what do they have? A big compost pile of things that they didn't sell. So I put in fairly high numbers, and I put in some example prices. And with those situations, the things in red they're not losing money, but what I wanted to point out is, for example, in sales, we're selling more poinsettias than anything. So if I think about, gee, I'm really selling a lot, is that really what I'm looking for or not? So poinsettias are the winner in terms of sales, but in terms of profit per crop, the petunia flats are doing better. But on the profit per unit, petunia flats are doing well. Profit per square foot, though, that's really what matters, isn't it? So it's a totally different crop. It's the geraniums in 4-inch pots. And if we look at price, it's geranium flats. So I think we often get really bogged down in sales, but guess what? Poinsettias, we're selling a lot of them, but we're not making it. They're the ones that we're making the least amount of money on. Again, I think people in the past, bedding plants were profitable, and then we think, gee, I've got this greenhouse, I'll just stick it full of poinsettias in the fall, and we can't sell as many poinsettias as we can bedding plants. So we've got an oversupply of poinsettias. If we go to those tripled fuel prices, what happens? We start losing a lot of money on most of our crop, or at least geraniums and poinsettias. But if we can increase the price a little bit, we can come out of it. If we increase the price by 5%, we're still losing a little bit on poinsettias, but only a penny per square foot per week, which is probably something we could absorb. We're covering our variable cost, probably not covering our overhead cost, so we can probably survive that. But what happens if we got the fuel price increase we increase our price for 5%, but remember we said, oh, we sell everything? What if we really don't sell everything and we only sell 80%? That's going to hurt us more than that fuel price problem, is not selling things. So everything now starts to lose money. So again, keep in mind what your shrink is. And you see all of our numbers go really negative. In terms of the fuel price, we were hurting, but in terms of not selling, it's way worse. Because you've invested all that money and you're not getting anything back for it. So like I said, we added this column for outdoor production. So a lot of floriculture greenhouses, we found out when we surveyed them, a lot of stuff's being produced outdoors. And so the overhead costs aren't as high on those. So we try to separate that out. So just gave an example of cut flowers here and the information you could get from that. The latest thing we've added is a cash flow. And this, you're going to have to put the numbers in yourself. It'll move everything over from the income statement. But then pulling it into the different months, you can do that and sort of use this as a planning tool. So what does the cost accounting program do? Well, it lets you calculate the profitability of your greenhouse crops and your outdoor crops and look at the ratios, track them from year to year, do some benchmark analysis, do some what-if planning so you can do it on paper instead of here. And I didn't have a lot of time tonight, but a lot of times when I show this example, the poinsettias aren't making money, what's the first reaction that people say? Ditch poinsettias. And what happens if I dump poinsettias? I should have put that slide in here. Guess what? Everything else starts to lose money. Why? Because you're keeping your greenhouse going, and the poinsettias are covering a lot of that overhead cost. If you take those poinsettias out, then you're only producing like half a year, and then the overhead costs for the other crops go up. So as long as you're covering the variable cost and part of your overhead cost, and you don't have another alternative for that space, poinsettias might make sense. So do the calculations here before you do it in the real world. So it does some what if so you can see what's happening before it happens in real life. So you can make some production and marketing decisions and you can manage those cash flows.